Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Thursday, July 8th, 2010. This morning we're talking about volatility rules. Now, I just wanted to briefly mention yesterday's blog. I was actually out of the office and had to do the blog on European hours, and at that time, the market was seeing some major risk aversion at that point. We had the Nikkei average was down, the Japanese yen was up, and it looked like the market was going to be in a risk-taking sort of day. But as I commented yesterday, that there was really no major news, no reason for that to happen. And we've been seeing this a lot in the market, that because the major fear that is coming from the Eurozone, namely, is there a problem with their deficits? Do they have bank problems out there? Is there potential defaults? That, during that session, you really get a lot of risk aversion. But then when the U.S. session opens, people realize, hey, wait a second, this is a buying opportunity because there's really nothing that changed from the prior day, so perhaps we should be buying here. And as we saw yesterday, markets were up, pretty big. So that's sort of what happened yesterday with the market, and it just goes to show you that there's a ton of volatility out there, that we're going to get these movements, especially intersession movements. The market trades 24 hours a day, so when the Asian session opens, they have their own thing going on. Then you've got the Euro session, and then followed by the U.S. session. So that really drives risk themes, and it provides a lot of volatility, which is good for traders in the market. So that's sort of what we've been seeing as of late. But overnight, the Bank of England left rates unchanged, and they did not expand their asset purchase program, reflecting a view that their economy may be stabilizing. And the ECB, the Euro Central Bank, they also left rates unchanged, but they did start their own asset purchase program. So they hadn't done that before. It looks like now they're going to start doing it. There's some talk in the market that they may need to do more on that front, and especially depending upon what happens with these results of the bank stress tests, which are due out, I believe, in 2 weeks. But I want to take a quick look here at the Aussie dollar. Australia, strong move today. Okay, overnight they came out with their employment report, and unemployment rate fell to 5.1% versus an expectation of 5.2%. They added 46,000 jobs. The expectation was for 15,000. Now, this was moving the Aussie higher because the market had been fearful that a potential Chinese slowdown was going to affect Australia and that they may not need to continue raising rates. Well, it looks like the economy's still booming, and until we actually get that Chinese slowdown, okay, this puts rate hikes for the RBA back on the table. So that's what we're seeing. You can just see right here, this is a hourly chart, and the Aussie's been in a pretty nice uptrend since for the last couple of days here. Real quick, we'll take a look at the dollar CAD. Same deal. You can see dollar weakness means Canadian strength. Okay, we're moving back towards the just under the 104 level there. Okay, oil's a bit higher. Canada's having their own employment report tomorrow, and if that comes in better than expected, it could be a sign that the global economies are starting to recover. Real quick, we've got the pound. Okay, the pound is mixed this morning. It's falling in line with the way that it should as far as risk taking goes. But we're actually down a little bit versus the dollar. On a normal risk-taking day, the pound would be higher than the dollar, but because of what's going on in England, with their rate hikes, and there may be some mild disappointment that they didn't expand their bond purchase program. Now, they had industrial production and manufacturing production figures came out. They came in a little bit worse than expected, and also home prices fell a little bit more than expected. So it looks like the UK economy is slowing down. But we know that they're committed to austerity measures. So the question is that are they going to still be able to grow going forward while they're trying to rein in their deficits? So that's going to be something to keep an eye on. Real quick, we can look at the euro. Okay, euro's higher here versus dollar. You can see that just sort of eking higher up to, just under 127. Okay, German industrial production figures came in much better than expected, showing signs that there are some economies within the Eurozone that are improving. Okay, and lastly, we've just got some yen weakness. That happens when you get risk taking. Overnight, the Nikkei average was up very big. Now, a lot of times, even though the Asian markets, stock markets, open technically before we do, it's our Sunday night versus Monday morning when we open, they tend to follow the U.S. market. So when you get a day that the U.S. market's up pretty huge, it's a pretty safe bet that the Nikkei is going to follow along. And if the Nikkei is higher, you're typically going to see the yen lower. Okay, so we've got risk taking back on board. You've got people doing carry trades. All right, we can look here at Aussie versus USD. This is Aussie versus JPY. This is pretty much the risk pair. This will tell you if there's risk taking going on or risk aversion. And as you can see, there's been some risk taking as of late. So that's what we're seeing in the market. There's a lot of volatility out there. This is most definitely a trader's market. Okay, volatility provides opportunities for traders to profit from changes in sentiment worldwide. Now, a lot of people, like to be longer-term investors, but to be honest with you, I can't tell you where the market's going to be a day from now, 2 days from now, 1 week from now, 6 months from now. All right, so this is really a market that benefits traders for people with shorter-term views because there's enough sentiment changes between risk aversion and risk taking that allow for major profits to be captured. So that's what we're looking at right now. There's still fear in the market out there, and different events, different news stories are going to change sentiment on a day-by-day basis. But as a trader, I'm prepared to profit from them just by keeping an eye on the news, what's going on, and of course reading my charts. So if you're not in the Forex market, I highly encourage you to take a look at it. It's very easy to get started. You can open up a demo account so you can practice, sort of see how it works. We have fabulous trading courses available which will help teach you about some of the things that happen in the Forex market and how you can profit from it. So that's what we've got for today. Keep an eye on the volatility, and good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.